Okay, today is December 21st. Last day I'm really going to look at the markets for this week going into Christmas. I want to start at the daily range using the premium discount layout to determine the high time frame turning points during the day. We're going to use this as our template to avoid fighting incorrect bias. Several weeks of back testing, maybe 2 weeks of forward testing have proven this to be a pretty accurate methodology for not fighting bias. So I think with one exception, it would have been the yesterday afternoon where the afternoon high fails to get to their daily range high. So at 2:30 or maybe it's 2:15 or 2 o'clock when we would have displaced the relative or the lower low, or excuse me, I guess it would be the higher low that it was put in at 11:15, which I'll show you in just a little bit. You'd have had to have known that it's displacing from premium on a day where it could be the high of week. So I'm saying that to say, the daily range is not, again, itself a panacea. It's a tool that must be integrated within other frameworks. So for what it's worth, I guess I'm saying is that you can't just buy in the bottom and sell on the top automatically or immediately. There needs to be, you can start there. The day will usually start that way, but things will develop and you have to incorporate other pieces of information as you're reading price action. So let's get into the daily range, the 1 hour PD arrays, 15 and 5 minute breakers, and the time of day everything happened. So as you look at the day, you can see that the daily range high has not changed. The low, once we went past this and broke through the fair value gap, then the next one down was this one. So we just returned it to where it was on Tuesday. And the fact that we bounced off of that showed a big, large gap up, something I'll cover here in a moment. But then, so this is our daily range high, and probably going to end up being the weekly range. So we can return that to 1 hour. And I will say, from a performance standpoint, I did not get up this morning, did not prepare as I normally would have, for a couple of reasons. That is on ETH. It doesn't matter, but the point is I wasn't fully prepared to execute the day. But this is, with the exception of this here and this there, what was on my chart. And I was expecting, since we were up here, that we would not go past this area because it was deep in discount. It was already in discount, so I expected us to come down here and then bounce up. However, before I get into any of that, let me just explain what you're seeing here. In the daily range, you have the discount, you have the premium. And in fact, I'm just going to do this. I'm going to do the same. Well, no, it's fine. And then again, so there's two things there's one idea that we're expecting to see play out here. We're expecting to see that this fair value gap get filled in, or that it will just displace even lower. It'll take everything out, and we're leaving this whole range. Those are basically the things that we expect to see happen. High time frame bullish conditions, and we're in discount relative. We're in relative discount, and there was unemployment news. So this is how I marked everything out. Now I like these breakers up here with a high of week, template. So I think they're strong ideas, especially if you get an attack right at 9:30, right at 8:30, right at 9:30, right at 10 or 10:30. To me, without some breaker they're bouncing off of down here, then those seem to me like great shorts, and they're credible shorts, because what we care about is location, time, and displacement. So you've got location, you've got time, and you've got displacement. So all the factors are there. If you go down to the 15-minute and you start to look at the breaker arrays in the 1 hour arrays and narrate the session and the displacements, where we're looking for a session rate in reverse with a displacement. It should hold the respective PD arrays relative to its displacement. And when it does not, that's a clue that they've inverted. So, for example, where did that happen? Well, here's an example where we displaced higher and we did not hold this area. We actually had to go deeper than that. We had buy sell side here, and we actually had to go deeper. So while I did expect this to get up here, and it ultimately did, it had to go down even further before it did. So as I said, when we're dropping to the 15-minute, we are looking for the 15 and 5-minute break array in the 1 hour. And the session rate and reverse with displacement should hold its respective PD arrays. And it didn't, which means one of two things. Either we're going lower, we're displacing lower, ultimately we're wrong and the bias is going short, or we need to go to a much greater discount and it will create an array that we can work off of. So how should we have interpreted this morning? Well, the way we did interpret this morning. This is an interesting thing that happened. If you take this to RTH trading hours, you see that we bounce off of the daily range low and there's this massive gap here, and unemployment runs us up. Well, it ran up before that, but then at 9:30 we run up again and hit the breakers that are there in the ETH session. You can see that right there. So unemployment ran up first, went to the deeper one, and then because it was the correct bias for the time frame, the lower one, the next one in succession, functions to bring us down to here, which then waits for a 10 o'clock reversal. It runs through sell side, and then it bounces off of this one because it's in deep discount and it's in discount relative to the entire run of this whole area here. It's also the midpoint of the gap up. So there's a lot of reasons why running through this liquidity and reversing was likely to happen. But when we couldn't get above this 1 minute balanced price range, which you see, and this 15-minute order block that was the 9:30 open, then it seemed likely that even though if we did bounce off of this again and make a new high, that we were probably going to go lower. How much lower? Hard to say. This is just one of those things where you just got to accept what it's doing. It is selling in some respects from a discount, but every push up to premium was met with a sale. So push up to premium, sale, push up to premium, sale, push up to premium. Doesn't even get to premium here. This one does right there at 10:15, and then we sell off. So probably we need to go down before we go up, if we're going to go up at all. Now, my suspicion for why we would go up is because we're above the daily range low and we're in deep discount relative to this range here and also the daily range. So anything below this line is really pretty deep discount. And then below midnight is discount on every time frame. Every available time frame we're in discount. So have you noticed a pattern here that every time that we get below or above the deepest possible level of discount on every time frame, that's when you have some pretty explosive moves? So that's interesting because that doesn't happen until 1320, 120. That's when that happens. And that's when we actually end up taking off. And then from there, you get a balanced price range. And then all these breakers start being functional again. So those are the 15 and 5 minute. Let me just, that's the a little bit of the tools, the heuristic tools of the algorithm. Now I'm going to pull some of this stuff off here and walk through the narrative of the AM session so that we can talk about what we're actually seeing. I don't know if I'm going to be able to reach that. Oh, yes, got it. And then, yeah, there you go, right there. So that's interesting. This wasn't on here, obviously, but I'm just throwing it on there so you can see what it reacts off of. That's a breaker for me. High, low, higher, high. Okay, so anyways, this is what the discount section area looked like, with the exception of this that I just added on, of course. And so what I saw, my rule was, hey, yes, we do have relative equal low, but we don't know it's going to go there. We got a big displacement, so I expect these breakers to hold, and then they don't. So then it pushes through at 10 o'clock, and then we have a breaker just below. Now, the reason for this trade is on the high time frame, we have a location-based trade at time, within 5 minutes of 10 o'clock, at time where there has been a displacement and a failure to displace also. So all this big long displacement here is also at this itself a failure to displace lower. So the idea of being in deep discount after a liquidity run should have pushed us long. So those are all the reasons why we should go long there. And then you see it go up, make a new high, and then you take it where it first failed, take it again with the expectation that it's actually going to clear these highs. Now it doesn't. No way to know that. No way to know that it's not going to work, but I was 65% sure that it was good, and then so there was some doubt that we were correct. And then it pushes down again into discount, and then below the lowest possible area of discount in array on all time frames, and then that's when the explosive move actually happens. So I just want to point out like how we executed in this. Number one, I did see this as a possible short. I just got to the desk at 9:20 or 9:20 market time, so I wasn't prepared. None of my drawings were updated or anything like that. But real time, I was watching this develop, and I saw this, and I was like, yeah, that's a premium. There's an order block. I expect that to hold, and it did, and it ran down into that time frame. We come up to it, we hold it, we bounce off of the second breaker in the sequence, but it cannot hold above this silver gap bullet 5-minute fair value gap, which was right here. And that was my one of my signature clues that we were actually turning over once this signature rolled over. And then when this balance price range held, and we came up here again, came down again, came up again, came down again, and failed to displace right here. As soon as that happened at 11:18, I said, okay, I think it's reasonable to believe that this breaker is going to hold right there, and that we would be targeting this. Now, it turns out that it doesn't get there. So it fails right where I was planning to scale when I was in this move right here, because I said, this is the failure point. If we are not going higher at this point, that is the failure point. And the reason I thought that is because we took liquidity, left the order block, and then shot back down. So usually that's a marker for like a Judas bar, what I call a Judas bar, where it's a reversal signature. So we use that to run lower, and then ultimately get down to just below midnight before we run higher. And then there's the methodology of getting in here is just watching this price action and trying to find a breaker that you can get a part of, or balance price range you can get a part of. So how does that leave us? Oh, I want to make one note that I thought was interesting. Today, most days there's a concern where, I've talked about wanting to sell on a bullish bias. I'm wanting to sell at certain locations to go down into the place where I actually want to buy it because I think it's going to go down there. And I've given myself no permission to do that anymore because I'm just saying like, well, look, I'm probably not good enough to actually be able to do that. But today was an example where I thought it was pretty clear that was possible. But the only time I was ready to do it was before 10 o'clock, and you only get one chance at it, which is at 9:39. This one, I'm not looking to do that because now I'm thinking after we've taken liquidity and displaced higher that we're actually going higher. So I'm not going to look to sell that because I've got a bullish bias. I'm in deep discount. I had it happen at time. It's a liquidity raid and reversal with displacement. So no, that's not a short. That's you hold for the long. Anyways, my point of saying this is like this is one of the first times where it was clear that you could short from a location into a long location because there was a large displacement here that I would have expected to fill in. Now, if we'd have been balancing all the way down in the bottom 25% of it, I wouldn't have done that. But since we cleared 50% of it, I said, you know what? I think this is going to get filled in. You see, that's different than, balancing all the way down here and then trying to buy this up into a location where you think it might actually reverse or something like that. So anyways, I think that's it for today. I believe I've covered everything that I wanted to cover. I think a piece of information that I want to share is the daily bias model, the daily bias formula of looking at the daily range references, PD array references, and using that to help us frame premium and discount has been good. I also believe that being conscious and remembering to look at the ETH time frame is helpful. And then also, when you see a range of price where it doesn't completely make sense to you, and this is a great example of it when you look from here to here, but definitely there. This is a place to apply a range tool so that you can see premium and discount nested inside of this premium and discount, and then that way, even if the so let me make a point. Even if the market had held here, I was in discount. There's nothing wrong with that trade. But if you add that other filter, you could say, hey, look, that may make me more willing to take this here and then again here based on however it ends up playing out. But here's what it definitely does. Here's what it definitely does. Check this out. Let's go back to it. It looks like I'm going to have to do it from here. Okay, here's what it definitely does. At this point, once you start to see this fail, then you've got a small window here where you can get short down into discount, even though you're in discount on the overall time frame. Why? Because it's failing from local premium. So what would that have looked like? I think it looks like shorting. And there's only one opportunity that I see to do it. Shorting right here. That's not perfect, but right there. That's the only place that I see it. And here is why. Because took liquidity, held, retested the book breaker, which is an additional swipe below the New York AM session. So this is a London low, a London close move that should have rocketed higher, and then it fails. It breaks through the bullet balance price range, which is now indicating that the next highest PD array above this should hold, which is here. And it does. And as soon as it does, it holds location, premium, time, 1136, displacement, test up, 1145 roughly, test a fair value gap, runs back down through this liquidity, and it's just acquiring. It's acquiring liquidity is what it's doing. And rebalancing this whole area over here, this long move, but back below midnight. So this would be an example of how the bias shifting. Now you don't stand in the way. You don't take it as soon as it's there. You have to wait for it to react and leave a PD array that you can use to frame the risk. And that's how you would take that down. So that's it for this week. That's it for today. That's it for this week.